probably an hour from now. The market's at the index level flat, but giving us a lot of trading opportunities. One of those evergreen stocks that has attracted attracted investors has been Symphony for the past several years, a multi-bagger stock, but posted a mixed bag of numbers this time. Top line growth has been strong, but the margins have been less than what we are usually used to with Symphony. Achal Bakeri, the chairman managing director of Symphony, joins us now. Mr. Bakeri, good morning. Thank you very much for joining us. You all have set standards high, and therefore, when the margins falter a bit, there's a bit of a disappointment. Can you tell us what happened at the margin level? Did you have to give discounts, or is it because raw material prices were higher?
Neither. Actually, we launched a new range of products, new range of models, which we have called the Touch range. That range, being a new range, was introduced at an introductory price, as we always do. Although this range was introduced in July, and bookings for these models had started pouring in from July onwards, but the deliveries were more or less affected in the quarter ended in March. So the bulk of the sales of that range, which was at an introductory discount, was booked in that quarter. And the response actually that we got for this range was overwhelming. So what we sold at a discount was far more, at an introductory discount was far more than what we had anticipated. So really speaking, it's the net effect of that. Now we could have, midway looking at the response we got, jacked up prices and done all of that, but that would have sort of destabilized, the channel. And so rather than, try and sort of take an opportunistic stand, we decided to bite the bullet and sort of maintain status quo, compromising, sacrificing margins, but sort of, let the material flow into the market. Yeah. So the net result is because of that, essentially.
Yeah, Mr. Bakeri, so should we assume that you will be climbing back to the 35 to 40% margins fairly quickly, as early as this quarter, next quarter?
Certainly not this quarter, because the sales of those models continue in this quarter, which is the the peak sort of summer quarter. So this quarter we expect the margins to be still lower than our historical percentages, but beginning the July to September quarter, we should be sort of back to where we have been.
Okay, Mr. Bakeri, good morning. About your traditional products, which of course you still are a big market leader, but you've seen, some bit of competition there as well, and at prices much lower than, say, Symphony. Do you see that sort of impacting your overall margins going forward?
Very honestly, no, because we are not new to competition. Apart from the newer players which have have entered into the market in the last year or two, there has always been competition, and competition from much larger companies than Symphony, and they've been around for 20 years. So we are used to living in an environment where our competitors are selling their products at a discount to Symphony. Actually, the thing is that our competitors cannot hope to sell at the same prices at Symphony. If we were to lower our prices, they will have to lower even further. If we raise our prices, we give them room to raise their prices. So the delta between our prices and the competitors' prices is a given, is a fact of life. And so, like I said, we've been living with that for over 20 years, and so this is not a new phenomena. We are very able to sort of deal with this.
So what is the volume growth that you've clocked in this quarter?
And we are able to do that. Sorry. Volume growth would be more or less in sync with the value growth.
Which was what?
Which is about 27-30%.
Okay, so this includes the new
about
launches.
27% or so.
Sure, this includes the new launches, because you've had some really good launches. I mean, Mobi Cool and wall-mounted air coolers, and some of them have done really well. So, is this 20% growth something that
yes,
you can better because of the new launches?
27% for the year and about 33% or so for the quarter. So, well, I really don't know, but I think, sort of this kind of a growth is our historical growth rate has been, in that sort of vicinity, and we expect to be able to maintain that going forward.
Would you see the market evolving now into air conditioners, and that maybe in a year or so becoming a bit of a overhang?
Not really. The air cooler market is growing at a pace which is more or less the same as air conditioners, at times even more than air conditioners. So these are very different market segments. You have fans, you have air coolers, you have air conditioners. So they sort of coexist. There are homes which have fans and coolers and air conditioners, or fans and coolers, or coolers and air conditioners. So these products sort of coexist. So in a country like India, which is hot and where you need sort of comfort cooling, there will always be a market for products like air coolers. We don't really see air conditioners eating into air coolers and those kinds of things. Air coolers also have their compelling advantages. They are portable. They consume much less electricity than air conditioners. They are plug and play. You don't really need to install and any of those things. So there are compelling advantages to air coolers.
Actually, we don't,
because of which we expect the market to continue to grow.
In Bombay, we don't use air coolers as much. I know that a lot of air coolers are used up north, so that's not really a system that works very well in Bombay. But in any case, I wanted to ask you a little bit about exports finally. What's the order pipeline like, considering that your orders have been picking up in, Southeast Asia, West Asia, etc.? How are those pockets looking?
Fairly good. Our exports has also grown more or less the same as the overall growth, and we expect that to continue going forward. We are sort of growing in markets where we are already present, and we are also seeding new markets which will over time start bearing fruit. The product is a universal product. Again, even a market like Europe, there are air coolers being sold because of its simple, plug and play kind of nature. You have very short summers. Homes are not air conditioned. Homes are heated but not air conditioned. And for a short summer, the day that mercury spikes up, you go out, get something, plug it in, and start
that point is
getting the benefit from that.
That point is taken, Mr. Bakeri. Sorry, we're just running out of time. There are a couple of questions that my team wants addressed. You are sitting on a lot of cash. A, are you looking at a buyback? And B, are you interested in Kenstar?
On the first question, we have stated in our shareholder reward policy in our annual report last year that we will sort of look at all kinds of ways of rewarding shareholders, being dividends, bonus, buyback. So buyback is also one thing which is sort of something that we have been considering for a while, and we may do that in the foreseeable future. Dividends and bonuses are the two things we've already been doing. We've had a track record of dividends. Last year we also gave a bonus. As to the other question of Kenstar, it is the second largest cooler company in India, our keenest competitor, and a company and which, or a brand and products which we have always respected. We've had a healthy sort of competition, but we know that it's sort of, we've read about it being in the market and all of that, but we really are not really so keen to look at it.
All right, so we'll leave it at that, but that question keeps lingering in market chat. Thank you very much for joining us with so many details about the company and your outlook. We have to take a quick break, and we'll be back with our commodities editor and an expert giving you commodity strategies.